Good afternoon, guys. The present time is 2:07 p.m. Tuesday, 7 July 8th, 2014. You know what? Let's get a timestamp real quickly. Yeah, hold on. Okay, present time again here is Tuesday, July 8th, 2014, 2:08, timeanddate.com, in which we have no affiliation. Okay, let's take a look at Apple, because we sold, let's see here. Okay, let's take a look at the Apple trade here today. First of all, we had made an error and knew something was wrong. We were looking to sell the Apples, accidentally sold the calls, which we immediately corrected. So when we sold the calls there, you'll see we were looking to sell the 93.21, 93.57 puts, but we'd accidentally sold the calls. Got a credit of $1,300 within about a minute and a half, realized that something wasn't right, and then found the error. And so we got out of it, and we got out of it. So it was a break even, but it was an error, and we immediately went into the puts. That's what we wanted. We wanted the 93.57, 93.21 puts. It was just hit the wrong button. Okay, so we got a credit of 10 cents. We sold 50 of those, and we got a credit in the account of $500. Okay, and so let's take a look at the 93.57. The 93.57 put. Okay, we got a credit of that. Let's see here. There it is. Okay, so when we sold the 93.57 put, we got a credit. The price, was 43 cents. In order to put on a spread, we put on a protection as well, and so we bought a farther strike price at 33, and so that's what gave us the difference between 43 and 33 is 10 cents. So that's what went into our account times 50, and that was $500. Okay, but let's focus on the one that we sold. We sold the 93.57 at 9.26, and we got a credit of 43 cents on that. Okay, let's go to the chart and see what that's done. By the way, that already right now, if we were to close this out, we would keep 275 of that. Actually, it gotten as high as 300, but that's what it is right now. If we wanted to close that Apple position out of the 500 that we got into the account, because it hasn't gone to zero yet, you see, because there's still time value remaining, but that's 275 right now that we can go and frolic around whatever we want to do. And the great thing about Apple options is this could have been 500 options. Really, I mean, it's nothing. I mean, that's nothing in terms of the depth here. Okay, so what we're seeing is that a lot of older people like this type of trading, because essentially you're the house, essentially you're the bank, and the people that are buying options essentially have a lottery ticket mindset. They want to turn a $5 option into $25, and you know what? That's great. And that's why people buy lottery tickets. But more people lose than win, and that's why the lottery business is so very popular. The same thing applies with options. The majority of these options expire worthless. That's statistical, because of traders buying these options really at the wrong time. So let's take a look at, when we say the wrong time, their entry is not based off of a reversal. Their entry is based off of the good is getting good, meaning that they're trend following. So if price is rising and then they wait for that magical 20-day moving average exponential crossover to occur, and they all go clamoring in, the people that are writing the options are marking those options up because of volatility premium, and they're selling those options to these people, and price needn't do very much in order for a very substantial percentage of the price of the option to disappear. So let's take a look at what occurred with the 93.57 put that we sold. Okay, so we got that at 43 cents. We sold that at 43 cents. Let's take a look at the Apple. This is the Apple 357 put, 93.57 put. That's what the P stands for. We sold it at around 9.25, and we sold it for about 30. We sold it right around here at 43 cents. That option is now trading at less than half its value. Okay, and we got long right around here. Okay, how do we know? Using isometry, understanding the bar types and the sequence of the reversal, we were able to identify that sequence with Apple, and as you see here, that's what occurred with Apple since then. So Apple went from 94.40 to 95.40, $1, yet the options lost over 50% of their value. And this happens, boys and girls, day in, day out, day in, day out. Okay, so it's while we're not going to be arrogant, we are going to tell you that you should consider yourself extremely fortunate to be able to have this shown to you in real time, because I doubt that this has been done before. Okay, so we won't be arrogant, but we will let you know that you should consider yourselves extremely fortunate. So of that 500 that we got, 275 of that in less than 1 day has been captured. Now I think the margin requirement for that was about 900, and so we have already gotten over 20% return on that capital, that the margin requirement for that. Okay. Let's see what else happened. Okay, with the Amazon, if we close those positions out, we'd be at about 27.20. We sold some very nice premium on the 315, 317s, as well as the that was today, as well as the 340, 345s. Let's take a look at Amazon right now. Okay, and as you see here, Amazon has lifted as well. Okay, how do we know? Because we were able to identify the sequence in terms of the three pieces of information that is always present in market activity, to identify that hidden sequence which eludes most traders. So instead of trading Amazon, or instead of trading the futures market, we were able to sell the volatility that was lumped on to the downward move, and then all that we have to see now is merely a sideways move with time decay or time erosion of the options price. That's profitable to us as well, and our level of concern would be all the way down here at 317. Nice. Alright guys, that's going to do it. If you'd like to know more, of course, you can go to our site, alphatstrategies.com. We do kindly request that you do fill out the Trader's Questionnaire before signing up for any of the course materials. I think the next class is the 14th. Is it the 14th? Yeah, it's the 14th. Alright, but it's all on the website. Alright, thanks for watching.